you, but after last week, things aren't still feeling overly real. I actually have a neck massager under my desk because I can't turn my head really well. And I don't know what's in my cup today, but it's very needed. So, but I am joined with three other gentlemen that are amazing brain trusts in our real estate industry to help us navigate this casualty loss situation from the storm last week. So I've got on the upper square, like Hollywood Squares, I've got Britt Fair with Fair Texas title, and I believe 12 offices now around the Metroplex, right, Britt?
Mm-hmm.
Awesome.
Right.
And then I've got under Britt, we've got Todd Campbell of the Farmers Insurance Todd Campbell Agency here in Dallas, Texas. Thanks for joining us, Todd.
Thanks for having me.
All right. And right below me is Dave Smith with Caliber Home Loans and my fellow heavyweight 28 classmate. So there you go. Our names are all in their appropriate boxes. But gentlemen, thank you for jumping on. I know things are changing by the hour right now, and our phones and emails have not stopped. But it's really super important that we take this hour and just try to help where we can. So we did a webinar earlier this week on the 1 to 4 family contract. And for people that are joining us that might not be realtors, that is our residential contract in real estate and what it basically says when we have a casualty loss situation, which is basically what this winter apocalypse was last week. So I'm going to start off by reading the paragraph. But then I don't want us to get stuck in the weeds because I think it's super important that we really talk about being solution-based in this scenario and not just legalese what the rights are. So casualty loss, if any part of the property is damaged or destroyed by fire or other casualty after the effective date of this contract, so when the contract was signed and executed by all parties, sellers shall restore the property to its previous condition as soon as reasonably possible. So whatever that condition was, when all parties agreed to move forward under contract is what the house has to go back into. But in any event, by the closing date, if the seller fails to do so, factors beyond the seller's control, buyer may A, terminate this contract and the earnest money will be refunded to the buyer. B, extend the time for performance up to 15 days. And the closing date will be extended as necessary. Or C, they have the option to accept the property in its damaged condition with an assignment of insurance proceeds if permitted by the seller's insurance carrier and receive a credit from the seller at closing in the amount of the deductible under the insurance policy. Seller's obligations under this paragraph are independent of any other obligations of the seller under this contract. So that's the legal portion, which just basically says, hey, we've got options. You know, we had a lot of damage. Not everybody's was universal across the board. Where do we go from now? And I want to make sure I don't see anybody chiming in just yet. But so make sure that you put your questions in the chat because that's what we're here for. This is supposed to be, more like a fireside chat. We want, you've got, like I said, a brain trust here to answer these questions. And we're going to do it to the best of our ability and know that, Britt is representing Fair Texas Title, so he is not representing every title company, and Todd's representing Farmers, and Dave Caliber. I am representing all realtors today, so what I say, let's go. But that being said, I want to start with Todd because I'm sure you're the one that's probably fielding the most of this right now.
Mm-hmm.
Can you give me a little nutshell of just what you're seeing? Kind of unfolding?
I can. Yeah. What we're seeing is one of the biggest and most devastating financially weather events that we've ever seen. Farmers Insurance has filed 22,000 claims in Texas so far. And, these are claims that, involve widespread water damage in every situation, and some are smaller, but some are absolutely enormous. And there's a myriad of problems that have resulted from the number of claims we're receiving, and all insurance companies are in the same boat right now. And the main problem right now is manpower. There's just not enough people to deal with the issues that are are happening right now. I mean, there's restoration companies are backlogged for weeks. Our area was hit very hard. Houston was hit really hard. I talked to a claims adjuster today who spoke to one of my clients in Houston, and he can't get a restoration company out for 4 weeks. A restoration company. He can't get a restoration company out for 4 weeks, let alone someone who can repair his damage. And so they're looking to the insurance company for help. And, there's just, we can't make, the workforce appear that could deal with this problem. It's an absolute nightmare right now, because we're just trying to adjust claims as best we can. And plus we have COVID going on, right? So a lot of our adjusters are adjusting claims by video and picture in many, many cases. Anywhere they can, they're doing that, and just sending checks without even going to the property. So it's just a big mitigation effort of both emotions and property damage. Uh-oh.
Did Ashley freeze?
Yeah. There she is. Are you back?
Okay. Well,
Okay.
Am I frozen?
Yeah. There you go. We got you
I'm
now.
back. Okay. Sorry. I'll try to do it really front nose when I do it next time. Okay. Good deal. Well, and I know for some they're going, oh my gosh, isn't that reckless? At this point, I think it's the best you guys can do. To get people on to getting on with their lives. And at this point, I think that's admirable that Farmers is moving so quickly, to progress these claims. But okay, so that's the claims part. Now, Dave, we were chatting right before we got on because you were probably just trying to catch your breath because things are changing from the lending side minute by minute. So kind of give me some context as far as, what is Caliber requiring right now on your different loan products as of 5 minutes ago?
Well, I was fixing to say, as of about 30 minutes ago, we changed what we are requiring on VA. As far as conforming conventional, all we are requiring is an attestation from the borrower. They have to go to their house. They have to make sure that everything's copacetic, that there's no broken pipes, no busted, water mains, roof is fine, which is a little scary in itself because, unless you're a home inspector or you know what you're looking for, you're basically just saying, hey, I don't see anything popping out at me. And they sign that form at closing and their loan funds.
That was from the borrower?
Yeah. That's only on conventional conforming loans. On FHA, USDA, they're requiring interior, exterior inspection right now. VA is requiring either a final inspection by the VA appraiser, which we know that's not happening right now. But they are allowing a licensed inspector to go out and do a certification that there's no damage.
So, you know what, you bring up a good point, Dave. So, I wanted, again, we talked about we want to know what's going on legally, what the layers are being added on each of your portions of your industry. But you said the right thing. That's kind of scary to say, all right, buyer, go and tell me your pipes aren't broken, that nothing's leaking or doing anything else. And like we talked about, we're in a pretty aggressive seller's market right now. And there's probably a lot of people that are saying, okay, no problem. Great. We can keep the ball rolling. Let's go and look. I'll go run the water. Not a big deal. But like we discussed, that's where myself and other agents in our industry, we have to say, pause. Everybody just take a deep breath. Like Lillian has said, she's learning to develop patience. She was affected. So just because it can be done with short time frames doesn't mean it should be. So I would just kind of put that caveat. It's great that Caliber's not going to add extra red tape, and I appreciate that. But that doesn't mean you shouldn't still do a modified inspection on the types of major systems that were potentially leveraged during the storm. So that's kind of my asterisk there. So Britt, I have a question for you. Did you guys still have closings last week?
We actually had closings last week, and I was surprised by it. What we have seen, however, is a reduction in the number of closings this week. I think there was enough time for people to kind of say, hey, wait a minute, what's going on? And so I think we've had a lot of deals actually push out of this week and closing first and second week of March, just in hopes that they can all kind of everybody get comfortable that whatever happened or didn't happen with a property, that everybody can get on the same page. So yeah, we were surprised to see how many people were actually closing during the ice storm. But then this week there's been a little bit more of a, hey, let's all hold back a little bit.
Okay. Kind of surprised.
Can I chime in on that? The reason why that was able to happen, at least on my end, and I want to say it out up front that this is Caliber specific. I haven't spent a whole lot of time scrounging around Fannie and Freddie's websites to see what they want, because it's not particular to what I'm doing. But I closed a couple loans on Friday and Saturday, and they were both refinances. But we didn't need to do anything because the documents were out before FEMA email came out declaring the disaster. So that's why loans were able to close last week.
Well, and so, that's something that obviously we want to go into now. Now everything's starting to catch up. There were people that weren't even operational, so probably couldn't sit there and start to throw a cog in the wheel. And now we can. So, I would sit there and say, I want to kind of talk about, are you seeing any lender required repairs yet, Dave? Have you seen anything come back from any of these inspections yet that say, okay, this needs to be completed prior to moving forward?
No, I haven't even seen any. This is so now. It's just happening. It's really crazy how much throughout the day these things have changed.
Okay.
Personally, most of my closings are out next week, further out in the month. So I don't know. I've got a VA loan I'm trying to do right now, and now I'm trying to find an inspector. So I haven't found anyone yet who can get out there. So I think that's going to be a big problem, is just to get the initial, some of these, interior looks or exterior photos, just to get a human out to these places. I'm sure they're getting pulled 100 different directions.
Mm-hmm.
So if you are an inspector that will be willing to do a certification for a loan,
you can make some money, man, right now.
Put your information in the chat so Dave can give me a call, because he needs somebody to go out to Roy City for him. So
a VA certification, that's all I need. It's a new build. It's in great shape. Nothing's wrong.
Easy. Yeah.
Yes.
Easy peasy.
No, that's great. Okay, well, going on to, and I'm so sorry. There's a little bit. Dave, do you happen to have a TV on or anything in the background? No.
Me?
Yep.
No.
Okay. We're just we've got cool reverb in the background, like a rock band here. So
I can turn my reverb down.
Yeah. No. So okay. So let's talk about real quick something that came out. Like I said, MetroTex did a webinar on Tuesday, and there was a really common theme that was coming through, and it was basically, what are these claims looking like? What's being covered? What's being excluded? Todd, we obviously have seen a ton of stuff on pools. And every insurance company has a different, I think, opinion on this right now. So from a farmer's perspective, let's start on the pools, because I think that's where there's a lot of questions. What are you guys seeing there?
Well, we were getting a bunch of maybes from claims leadership, and we've talked about this in meetings because it's a big deal. And typically speaking, insurance covers damage. It doesn't cover repairs. It doesn't cover equipment breakdown. Typically, there's endorsements that can be added to all sorts of policies. But my easy way of explaining it is, if your washing machine overflows or springs a leak and floods the house, the insurance is going to cover all the water damage, but it's not going to buy you a new washing machine. That's the way insurance works.
Okay.
So, but in regards to pool equipment, we've been told by claims that it's going to have to adjust it on an individual basis. they've said things like if the pool equipment is tied into the main plumbing system, which I don't know of a pool equipment system that's not tied to the main plumbing system of the house. They're saying if it is tied in, then there may be coverage. Yes, but we've got to go look at it. Now, it's got to meet your deductible. So, pool equipment is made of PVC pipe typically, which is pretty cheap. And, it's the above ground stuff that's going to have the leaks. It's not going to be the in-ground stuff. So, if you've got a $250,000 dwelling policy at 1% deductible is $2,500. So if the repair doesn't exceed that, then it's a moot point. So, but I do have customers who have widespread damage inside the house, and they had leaks in the pool equipment. And so that's, in that case, if the adjuster sees that there can be coverage, he's just going to add that repair to the total.
Okay.
So, bottom line, what do I do as a consumer or homeowner? I make the claim is what I do. Let's make the claim. I'm sorry. Before you do that, you need to understand the costs associated with the repair. So you got to get a contractor out. And this is a common misconception with insurance. People think that when things go wrong at the house, insurance is the first people to call. And that's the first people you should call is people who can stop the problem from getting worse.
Absolutely.
You need to get contractors out to stop the damage. Then let's call the insurance, because the insurance, all their job is to look at the damage, give an estimate, talk with the contractor to come up with a fair price. The contractor and the insurance company decide on what's fair, and the insurance company pays the homeowner. They give that money to the contractor. So my point is, insurance is not the first in line when a disaster happens. You need to call people who can deal with a disaster first. So, and I've had lots of calls about, oh my gosh, I've got this leak. What do I do? Well, oh my God, you need a plumber, and you need a sprinkler expert, and you need someone out there now to turn that water off. So if you can go turn the water off now, and then, get a contractor out, you need a restoration company. So we've had those types of calls.
Okay. So that's a question on there. Insurance wise. Okay. So what does that mean? Is the homeowner going to be penalized for water damage if the pipes freeze and burst? Because this is a catastrophe.
It is a catastrophe.
I've heard a couple of different things, but because if the water was off, maybe wouldn't have been water damage. So what's the area there? Is it something that's going to count against the homeowner as a water claim they could have mitigated?
As a general bit of advice, always do what's right to mitigate damage at your house. Having said that, you pay premium on an insurance policy for coverage. The first thing you should be thinking about is using your insurance to get money. If you did everything that you can reasonably do to stop damage from getting worse, then that's all you can do.
Yeah.
So I like to tell people, you're paying premium for coverage. Use the coverage. Don't worry about whether you're going to get penalty, because there's not going to be this big penalty for it. The reality is we're all going to get rate increases because of this. That is the reality of what's going to happen next year. This is estimated to be an $18 billion property loss in Texas. So that's not in the budget for insurance companies. Catastrophes are, but this is called a generational catastrophe, just like Hurricane Harvey was in 2017, a 500-year flood. Well, flood zones are 100-year floods. That was that's something that just doesn't happen. So the budget isn't there for that. We're going to get rate increases. So my point is, don't worry about whether you're going to get penalized for it. You're paying premium. Use your insurance. If you need the money, get the money from the insurance company. Make the claim. That's what I think people should be thinking about.
Well, and I think that's so wise, because that's the first thing. Oh, I don't want it to count against me, just like a speeding ticket or something else. And
right.
like, no, the insurance is there. What the freak do you have?
Use it.
It's there for a reason. And that's why having people like you, Todd, and your other agents in your office are going to be the ones to sit there and be that calming voice for a minute and say, it's okay.
It is.
Let's make the claim. Let's finish this out, and then we're going to figure it out. But this is the right step to make.
And as a side to that, I'm sorry. We in our talks with our claims department, we were told how to instruct clients to make claim. When you call the claim in, make sure you say it's because of the freeze. That way it'll be coded as part of the catastrophe, which means it won't count against you, so you don't have to worry about any of that. So we've already given our clients specific instructions on how to file claims, and then we've had some claims recoded because that stuff gets lost in translation. And that's what an agent can do for you, is just to make sure after the fact and look after your file, to make sure everything's coded correctly and things like that. But, again, it's just all about, you're paying the premium. We've all paid a lot of premium to insurance companies. Time to get some of that money back. We've experienced some widespread damage. Let's get the money.
Great sentiment. Appreciate it, Todd. Okay, so Sherry Fearbacher's chiming in, getting things going because we've got a quiet chat this evening. But lenders are setting guidelines that they're comfortable with in protecting their firms, and they should. But realtors should be looking at what's best for their client/buyer. Period. And that's what we've talked about. Right. Make sure we're all awake. It's all good. But that's the whole point. We're all talking about what logistically, and legally we're supposed to do, but it's still ethically and professionally what we should be guiding our clients, our friends, our partners in this. So another question that Sherry had, can insurance even get the claim payment settled in time for a closing if buyers elect that option rather than waiting for the repairs?
Absolutely. We can pay the same day we look at a claim. And surprisingly, if you're familiar with making an insurance claim, especially on a home, they usually give you the depreciated amount up front to give to the contractor to get the work started. Then when you prove the work has been completed, you get the recoverable depreciation on your replacement cost policy. So what we've seen farmers doing lately is just paying the full amount with no proof of repair. And if the client accepts an electronic funds transfer form of payment, they can get the payment deposited into their bank account in 24 hours. The problem is, again, manpower. And, right now we're guaranteeing no more than a callback from the claims adjuster is going to take 72 hours from the time you make the claim, because that's the backlog that we're dealing with. So we're trying to get the initial contact made from the adjuster to the client within 3 days of the client making the claim. Wow. So, so I don't, that, of course, that's going to affect timelines when you're talking about closings and contracts. But as far as making the payments, if the client cooperates with the adjuster, gives them as much information as possible, provides pictures. Like I said, we're adjusting a lot of claims by video and photos right now. The payments can be made very quickly.
Well, that's great. And that was one of the questions that came up in as a common theme. Okay, floors have been damaged from pipes and they get $10,000 to replace the flooring. Well, the buyers go, whoa, we don't want you to put carpet back down. That's not what we're going to do. We were going to renovate the house anyways. The proceeds can be assigned, correct, to the new buyer?
That's something insurance is simply not involved in.
Okay.
The insurance company is only obligated to their client.
Okay.
So if the client makes a claim, they are obligated to adjust the claim and pay the claim if there's coverage.
Okay.
And that's it. What the client does with the money is their business. There's no requirement to get repairs made by the insurance company. What's the ramifications of not making repairs? Any part of the house that was paid for by an insurance company, if the repairs aren't made, that's excluded from future claims, not only by the current insurance company, but also by the buyer's new insurance company. If the buyer's new insurance company gets a claim filed by their new client, the buyer, and that insurance company discovers payment was made a year ago on the same place and there's no proof of repair, they will deny the claim on that portion of the repair in the future.
Which is a great point to make. However, that's probably more prevalent in roof repairs and different things like that. So hopefully
more common in roof repairs for sure.
Yes. So hopefully there won't be as much of that. But then, Dave, that goes to you partially, and you, Britt. Okay, so we sit there and now there's 10,000. Actually, can you guys hear me?
Yeah, we got you.
I got muted for a second. Look at this. This is a fun day of tricks. So I guess that's a question. We've got these proceeds now. The seller says, hey, you wanted to renovate the property anyways. I'm cool with giving this money to you. You guys can do it after the fact. Dave, how do you feel about that?
I just can't. I was thinking about something that someone wrote up here on Sherry, and it kind of goes in there. It's like we have clear-cut guidelines as of like right now at 5:55 on what we need. That may change tomorrow, but it still causes. If I was a buyer, it would cause me some concern if I didn't do my due diligence and get in there and like really see what's going on.
Mm-hmm.
So, but in that situation, you turn around and we're waiting. Okay, they still want to close tomorrow. The claim's probably going to be a couple of days or something else. Britt, are you okay as long as the lender doesn't have an issue with it doing an escrow holdback for the amount that's supposed to be given via the claim?
Yeah, I mean, again, escrow holdbacks are there for a reason. They're a challenge as far as, you don't want something that's going to take a year to figure out. I mean, but, if we're talking something that's 30, 60 days, that's doable. You have to make sure that the escrow agreement is written in a very clear way that sort of says exactly what is being done. And, and then, how does the money get released? We typically have a bilateral release of escrow money where both buyer and seller have to agree that such and such repair was made, and very specific what that is. But, I guess in theory you could, depending on the title company and the attorneys who's drafting it, but you could have a unilateral release. But in general, we typically require a bilateral release of escrowed funds. But yeah, you can escrow funds.
Okay.
I think it may be better to fix the problem instead of escrowing funds, but fix the problem first.
Yes, always.
And I think that opens up just a whole nother can of worms in itself, because speaking from experience, going back to what Todd was saying earlier about use your insurance. I was one of those people, man. I mean, a year ago at Thanksgiving, I came home at midnight from Oklahoma and water was dripping through my light fixtures. I had a leak in the wall by the shower. It took me 3 days to find where the leak was coming from. But Todd, who is my agent, was like, man, I was like, I don't want to file a claim. I'm scared. My rates are going to get hiked up to the sky. He's like, dude, trust me. I mean, my little $5,000 problem turned into a $30,000 problem claim. And they just, literally 2 weeks ago is when they finished. It took me this long to find a contractor that we all trusted and all this. So I'm glad I waited because we got a great one. But it didn't start at 30. It started at like 18.
Mm-hmm.
So if I get an adjuster out and says, hey, this is what we can get, and you escrow that money, and then 3 weeks later they're in there like, oh man, here's another 10 we're going to need, what do you do at that point? I mean, you're already closed and done. Now I'm assuming you can get this taken care of with the insurance company, but you've already got money escrowed. It just, to me, that sounds like clear as mud problem,
I definitely agree from our standpoint. We would actually require, it doesn't mitigate that entirely, but if you expected that it was a $10,000 problem, we're not going to be escrowing $10,000. We're going to be probably requiring that there be more escrow. But again, actually that ends up being sort of a discussion between the buyer and seller, but that certainly would be my thought, Dave. I agree wholeheartedly.
Mm-hmm.
So what we're going back to again is there's solutions, but they're not always what's best, so to sit there and to continue to force things forward, unless your circumstances are just completely dire, it's okay to press pause for a minute. If everybody's on the same page, I literally right now have like a 92-day option period that I'm in. And, first we went under contract the Friday before the weather started. We have Snowmageddon, and then can't do anything for a week, extend the option period to allow the pipes to freeze then, or to thaw, to do a proper inspection on Tuesday. And now here we are, we have to get an adjuster out. They're not going to be able to come till next week. So we're literally going to have a 3-week option period. And that's just with buyer and seller both saying, hey, we're on the same page. We're committed. Yes, this is a little stressful. It's not conventional, but we need to make sure all parties are okay. And so we're just going to agree to keep moving forward as if we're all in good faith operating here. But this is what you have to do. And so it's not ideal, but it's what you got to do in these scenarios. So, so going back to Lillian, she's actually got an insurance question. Mitigation companies that she and her client have called want people to sign agreements without a dollar amount or a quote. Is this typical?
I mean, nothing's typical right now. I guess I would want to see what's on that agreement. And again, I'm not a contractor, so I don't know what's typical when it comes to what mitigation companies or restoration companies require. You just need to use your intuition on what you think is reasonable and what's not reasonable. There are more than one restoration companies or mitigation companies out there. So, we've been advising our clients to get on as many lists as possible just to get service as quickly as possible. But if someone's telling you to commit to a dollar amount that you feel is unreasonable, I would always say go somewhere else. I would definitely do that.
Thank you. And that's the other thing too. Listen, just because people are answering the phone doesn't mean those are the people you should be using to assist you.
Right.
I've been hearing a lot of people say, just call as many companies as you can, call as many plumbers, call as many restoration companies. I don't agree with that. Like you said, you have to make a conscious effort to better your circumstances, turn off the water, make sure that the problem doesn't get worse. But that doesn't mean you have to invite the devil into your home. And I think you have to use a little bit of, again, take a deep breath and say common sense has to prevail. This doesn't feel right. So, Lillian, my thing is if that's what they want you to do, keep calling. There's one that won't require you to stick your neck out and be, that vulnerable in that situation. So, Black Mongoose 13. So when a seller says a claim was made, ask for proof repair was paid for.
Absolutely. Which should be readily available if the repair was made.
Thank you. And it shouldn't be on one of those invoice pads that you can get at the hardware store. Hey, I've had one of those before where just by happenstance, the electrical repair and the plumbing and the roof were all on sequential pads. So double check what those invoices look like. And yes, Sherry Fearbacher for the win. Bilateral releases of funds after closing could be a nightmare. So Steve, Britt, you and Sherry, you're on.
I agree with Sherry. We still want it though, right, Sherry?
Always. Hey, that's the whole point is at the end of the day, if you say these are all the things that could go wrong, and then there's probably more, and both parties still say, but we want to do it. We're here to advise. We're here to do everything in our power, but ultimately it is still their decision to decide what to do. You just have to make sure you are crossing every T and dotting every I in the process, because good old Francie Bale just came in and has said, have you ever heard of any nightmares of, in our example, Snowvid? Closing was February 19th. Buyer moves in February 20th. House was not properly winterized and pipes break. Will this become a legal issue? Well, anything can become a legal issue. Britt, you were looking like you wanted to say something.
Well, I was going to say the exact words you did, which was anything can become a legal issue. Again, it's what did the seller know? When did the seller know it? Just because it happens real quick doesn't mean that the seller did anything wrong, but it depends on the details.
Well, and Francie, that's going back to, I've had clients that have said, oh my gosh, thank the Lord, we never lost electricity. Everything was fine. We had space, we did all this other stuff, and that's great. That doesn't mean you got away, free and clear. And you can't just say because you didn't lose electricity, we were in the negatives, and our homes are not equipped to be in those frigid temperatures. And so that's what we keep on saying. Maybe it's just not best. If you still think there could be an underlying issue, give it a few days, because it's always easier to fix something. Like Sherry says, first thing an agent, when they call in our office, and by the way, for anybody out there that doesn't know, I'm referring to her a lot. She is my mother. And she loves to go round and round with Britt Fair on these issues sometimes. Because there's always interesting and complex things that enter into our real estate transactions. And her biggest thing is, I've got a problem. Okay, well, has anybody died? No. Okay, then we can probably fix it. And that's the part. If you haven't closed and nobody's died, we probably can find a solution. So those are Sherry-isms for you right there. But I don't know. I mean, those are obviously all great questions, but something else that I think we are kind of tiptoeing around, and it's the ugly beast that has been brought into this scenario of the seller's market, with literally down 60% inventory that we were this time last year in some of our counties. Sellers are asking for temporary leasebacks, long temporary leasebacks, because, well, she said you're welcome. Yes, thank you, Sherry. So they're asking for temporary leasebacks because they're saying, I don't want to sell my house until I find my next one. Well, it's kind of this really nasty ecosystem that we've created. So sellers are dictating up front, hey, I'm willing to put my house in the market, but listing agent, I want you to put in private remarks to set the expectation that I want a 90-day lease back, because in our contracts, in our state promulgated forms, it states that we can have a temporary lease for that long. Anything beyond that becomes a traditional lease, but we can do sellers temporary leases. So just because we can, Todd, does that mean we should do leasebacks? Because the little caveat is that all the leaseback does is it does allow for change in ownership. Seller now has the proceeds. They've closed on the property. The buyer is now the new owner. Seller is now a tenant. They are temporary leasing back from the new owner. However, to get buyers to do this, we have to tell them, well, don't worry about it, because contractually the seller is still obligated to have full coverage insurance on the property. And if should something happen, they have to be physically responsible to repair it. They have to give you the home in the condition in which you were expecting it. And so that's all fine and dandy. That's what our contracts say. At the end of the day, though, Todd, when it's an insurance claim issue and a seller says, I'm sorry, I'm out. I mean, what does that look like on your end?
Well, leasebacks are a regular part of real estate transactions, right? I mean, it's not a new thing. It's always happened, but clearly we've got much longer situations we're dealing with right now. And in my career, we've run this by our underwriters many times throughout the years, and they won't ever give you a straight answer, because the straight answer is look at the guidelines and you'll see what the answer is. But in underwriting, it's all subjective, right? We're trying to paint a picture of good risk for the underwriters to take. So the only thing we've ever got them to kind of say is okay is maybe a lease back of less than 30 days is a reasonable lease back, okay? Which means the buyer, when they close, their primary homeowner's insurance policy must be in effect on the day they close. And the sellers are now tenants. And so the sellers, if they don't have coverage for their personal property, they should buy a renter's policy. And if I'm the buyer, a good advice for the buyer is to require the sellers to buy a renter's policy and put a lot of liability coverage on it. That way, if the seller, while they're in the house still, burn the house down, there's liability coverage that can cover the repairs on the house. So that's just a smart thing to do for any landlord, really, is to require renter's insurance. But so we're talking 90 days, 60 day, 90-day leasebacks. That will not fly. If you have a primary home policy, the client that we're insuring is supposed to be living in the house, and it's 60 days later and an issue happens and there's a primary home policy on it, that's not going to fly with insurance companies. They could get the entire claim denied, because what they need is a landlord policy if the leaseback's going to be that long on the property, which we can close with. You can close with the landlord policy. It's got everything the mortgage company requires.
So let me ask you this though, Todd. So technically, the way our contract, our leasebacks read though, it should be the seller's policy that should a claim be made. So if a hail damage hits or something else and they're in a temporary leaseback, the seller's the one that's obligated to fix the roof.
Well, the seller doesn't have a home policy anymore because they're not financially responsible for the property. And whoever's financially responsible is the one who's responsible for getting the insurance on it. It's the exact same thing as lending someone your car. It's your car, your insurance is on the car. You let someone borrow your car, which is fine. If they wreck the car, your insurance is going to pay for it, not theirs, because the insurance follows the car. Whoever's financially responsible for the property, whether it's a car or a house, is the one, and this is in insurance terms, that's who's responsible for getting insurance. That's the only person that can buy insurance on a property, the one who's financially responsible for it, the one whose name is on the deed or title.
Sure.
So, so that sounds like it contradicts what's on the contract. But the reality is, if I'm the seller, I'm canceling my home insurance policy the day I close because it's not my property anymore. So, and I'm going to buy myself a renter's policy, and I'm going to put $500,000 in liability on it, which costs next to nothing, by the way.
Oh, that's what Sherry just said. She said, can a renter's policy include casualty liability?
Absolutely.
Okay. So,
and that's why apartment complexes require their tenants to buy renter's insurance, because if their tenants do something that damages a building, they want to make the claim against the renter's policy. So it just makes sense to do it if you're going to be in a leaseback, if you're selling your house and you're going to be in the house for a while, get a renter's policy. It's just not that much money, and it takes the target off your back.
So I'm going to say something right now because I don't say this very often, but I'm sitting here going, because we haven't slowed down enough. And I'll tell you, I can't tell you I've done one transaction with an agent, whether they're brand new or been doing it for 40 years, that has ever had these type of probative conversations in regards to the temporary leasebacks. Britt's laughing because
I've never seen it. I've never seen it either.
No, it's Sherry Beermeyer. I see a form revision coming. Absolutely. We should be taking this back because we have, it's a triple pronged effect. We've got, the clients that need to make sure that everybody is on the same page. Then we have insurance companies that need to be able to insure properly. Then we have lenders, that need to know that their assets are properly insured. And that's the problem. We do sometimes cowboy out there and go, hey, it's a multiple offer situation right now. You want to stay for 82 days? Go for it. Just to know that I have a house and I've got it locked down. I don't care. I'm giving it to you. But we've got to slow down long enough. And that I will tell you tomorrow, the next time I write a deal, I have no problem putting in there a temporary leaseback, but I'm going to make sure that all of these policies are properly in effect and that everybody is on the same page before we close and sit there and do that. Because I can't imagine what people are going through right now. There are plenty of sellers that are still sitting in their homes right now that no longer own them. And there are buyers that probably paid $50,000 over asking price and had an appraisal waiver and all of this other stuff and don't have a pot to piss in. And by the way, I'm going to get in trouble for saying that because Sherry doesn't like that type of colorful language. But that's the cold, honest truth. And that goes back to what's legal and what it says in the contract is one thing, but what's right and ethical and professional is another. And we have to slow down. All right, Johnny, my buddy, I have a paragraph worth of verbiage for leaseback and insurance parameters. Laugh out loud. Doesn't do much, though, when the seller in this market wants it for free and with no strings or insurance. And he's absolutely right. And I think we talked about this, guys, when we were doing our run through. The first thing that an agent should be able to tell their client is at some point we have to be willing to walk away. Because this could be the difference of the financial trajectory of your family if things bust in your face. And it's all fine and good when you've made 27 offers and are trying to get one to pull through. It's not worth it 6 months from now when the smoke clears and you're busted. So, and that's on us. So Johnny, I agree with you. We've got our backs up against the wall right now, but at some point we've got to steer the ship back in the right direction and give people the confidence that while it's Hunger Games out there, we still have a right to advocate on our clients' best behalf.
Is Johnny asking that the sellers that want to lease back want to lease back for free? Is that what he means by that?
Yeah, and that's what it is. I mean, we're all giving leasebacks for free right now. Buyers are literally saying, I'll pay the mortgage for 3 months. You can stay in there.
I saw that on a contract the other day, and I was mind blown. I was like, are you stupid, man? What is wrong with you?
There is a large amount of stupidity that's going on in our industry right now, and I am very ashamed of all of it. But we're also dealing with people who are saying, "But I'm okay with it," but that's okay. If they're okay with doing an extended leaseback, we still have to find ways to protect our clients. Okay, so Kelly said, "What about a 7 to 10 day leaseback?" Todd, how do you feel about that?
It's fine. I don't think any action is required. My guiding light in insurance is what's reasonable. So 7 to 10 days is very reasonable. I mean, there's no sense in writing a landlord policy for 7 days. Okay. That's just a transition time. Okay. That's what's reasonable. So, and I would argue that till I was on my deathbed to my claims people, and they would pay a claim in that situation. It's the situations that are, they're not normal. The super long leasebacks, and we've had to talk our clients who had just purchased a house, and we talk to them 45 days later and find out they haven't moved in yet. We're like, bud, you got to get a landlord policy right now. We got to cancel your primary home and get you a landlord policy if you want a claim to get paid. And so, our job is to educate. And of course, we document it in our system that we had that conversation. They can do what they want. But 7 to 10 days, absolutely. I would have no problem supporting that.
Well, Dave, do the lenders have problems? I mean, at Caliber, obviously people get a loan saying we're going to be owner occupied. And then, if there's a 90-day lease back or something like that, I mean, have you seen anything blow up at the lender side?
No, I will say that in the majority of cases, I am in the black when it comes to leasebacks. I mean, every now and then one will be attached to the back of the contract, but a lot of times I'll find out later in the process, oh, well, they're leasing back for 2 weeks anyway, and nothing was ever given to me, with it, and
I'm sorry, Dave. You should have all supporting addenda. Okay, that is your right, sir. No, but and Carlene, yes, I'm trying to sit here and speak a little bit of truth for a second, because I know we're trying to get deals done for our clients, but this too shall pass, just like the early 2000s. And we went into 2007, 8, 9, 10, 11, I mean, that's what I keep on saying is, guys, the momentum's going to shift again. Things are going to recalibrate a different way. And you don't want to sit there and turn around and be one of the people that created a large systemic problem. So Johnny brings up a great point, because this is my thing. I don't care if you're the listing agent or the buyer's agent in this market. Be proactive. If you know your seller's going to need it, as the listing agent, talk to their insurance agent. Have a renter's policy already ready to go as a part of your listing documentation. And that's what we should be doing. Okay. So that's that proactive nature that all of us should be acting upon right now. And then going back to that, Todd, you said, I'm going to fight for this all day long if it's 7 to 10, because that's reasonable. There are other insurance companies, though, that are not like you. So that's the other thing, too. I mean, you guys have done some videos and done some other things, just kind of displaying what happened with the tornadoes and the storms in North Dallas. There's people that are homeless that haven't had the ability to clear up their insurance claims, but because your people were properly insured, they're out on the other side. Isn't that correct?
That is correct. And it's these aren't small houses we're talking about. I mean, it's Preston Hollow. There's some, we had one lady, and she had a $750,000 policy, $750,000 plus extra. And we maxed out the payout on her policy. I mean, it was a gigantic claim, and she's back in her house, and her next door neighbor still has a fence around the property. And this is a year and a half later now. And it's just ridiculous. And so the reputation, people think, I can save a couple $100 on my insurance policy a year. And, guess what? When you make a claim and it's a big one, you could care less what your policy costs. It doesn't matter. You just want it to pay, and you don't want to find giant holes in it. And there is no insurance policy that is, completely free of holes. Sure. All of them have exclusions, but knowing those exclusions up front and having the hard conversations is what your agent's job is. And that's what we try to do with all clients.
So here's my biggest beef with all of that. It's one thing if the debt to income ratio is one thing and we got to work some numbers to get things through. And maybe the insurance coverage is a little bit lighter, but still appropriate to get the deal done. You can go back and adjust it after the fact. And
we've done that quite often, haven't we, Dave?
Yeah, well, that's a good relationship. That's the thing. Okay, we might do some lighter coverage, but I really, guys, the area that you're in, the storm path that you're in, whatever else, let's beef this up after the fact. Call me in 2 weeks. And again, as an agent, that should be something that I am privy to, because here's my biggest pet peeve. You can go out. A number one at Wendy's now costs like $11. Okay, so you can go through and eat fast food 2 to 3 times a week and spend $120 a month getting fast food, but you're not willing to spend $120 a month on your insurance coverage when a catastrophe happens. So I get really stuck on certain things.
Don't get me started. I mean, just...
you always want the extra floor mats at the car dealership and go upside down, but God forbid you pay a little bit more for your house. So
it's hard to put it on TikTok and Facebook though, buying the insurance, whereas you can do it with your Starbucks and your Wendy's.
Yeah. Britt, you bring so much wisdom to the table this evening.
It's growing up with teenagers. I understand it.
But see, it goes back to being educated, because because this was a year ago that I was having conversations with Todd 5 times a week. Man, I don't want dude, you got to file. You have no idea what they're going to find. And it was so stressful on me. I just think we as lay people that are not and I've been in the mortgage business 20 years. It's like, I should know insurance upside down, but it took Todd and Matt to sit down with me, 5 years ago and show me why my insurance policy was a piece of crap, and that if anything happened, I was screwed. And they took an insurance policy that I was paying $3,000 a year on down to $1,440 with water coverage. And that water coverage is what saved me. And my other policy didn't have anything like that. It was crazy.
Dave, you said that was about a $30,000 repair.
Yeah.
And let's be honest. Most people don't have $30,000 just sitting around to make their home inhabitable. That's not a kitchen. That's not a kitchen update. That's making your home inhabitable for your family.
Right.
And that's the part right now. People are more stretched and leveraged ever before. And as the industry professionals here, we have an obligation to have those discussions. No, Britt, just because you see a really, crappy insurance policy and an agent going rogue on a contract, you guys are just there to, do your portion of the job. But that doesn't mean these aren't points of education that we can't have as we're out there in the real estate community, offering classes, educating people, educating agents, educating consumers, and offering this. And that's why Francie came. She said Todd's agency saved her tornado home. And this is why we are the panel of pros. And that's
can I add something there? I mean, I think that you said something about it's incumbent upon like the 4 of us and the people watching here to talk about, how important it is to do business by referral. Because, and the example I always give was when I bought my first house in 1999, I decided I was smart and the internet was new and it was going to save all this money. So I went to Lending Tree, Dave, close your ears, right? And because, they were going to compete for my business or whatever. And I ended up picking whoever it was. And it was a lender in Kansas City or something like that. And I got the lender's first name. And it all went to hell in a handbasket. And the deal didn't go well. I mean, I got my loan eventually, but we were late, and there was a hidden early payment whatever you call it. Prepayment penalty that I wasn't told about. All that stuff. But the point is that if I had actually had the advice given to me of, hey, don't go to internet.com, and get your insurance or whatever. I mean, you got to ask who's the best realtor or who's the best insurance or title company or lender, inspector, all these things. And I just think that is so important that people still lose track or lose sight of it. And your comment about saving $120 a year to get the cheapest possible insurance. Well, you get the cheapest possible insurance.
Yeah, that's what you get.
I got to tell you, right.
We get it. The cost of insurance we don't have any control over. And we'll help people especially if we're referred to a client. We're going to help them whether they buy from us or not. I mean, because we can try to get them later if we're not going to get them now. But helping them is what builds your reputation, right? I mean, everyone kind of understands that on this call.
Well, and that's what I think is the biggest. I mean, we are all reputation-based industry professionals. We are involved in, advocating with our local associations, state associations.
Mm-hmm.
And I know there's a lot of people that go, "Why do you do that? You're so busy. There's stuff going on." But you know what? I want to be a part of some change and some better business practices. And I don't know about you, when I heard this a few years ago, but that realtors on a list of trusted professionals are right under attorneys and right above sex workers, I was appalled. And at the same
insurance
time,
agents.
Yeah.
At the same time, I wasn't shocked. And that just says that we haven't done a good job of showing people our value proposition, which is why we have so much disruption, which is why there is a lendingtree.com and iBuyer platforms and flat fee services, because people have said, well, when I got the full service option, I didn't get full service. So if I'm not going to get full service, I might as well save money. Well, people need to know there is a full service option, and you actually get more than you could have ever imagined paying for by making sure that you work with somebody like sitting here on this call today. And that's what Johnny just chimed in and said. He said, I know Britt, Dave, and Todd are extremely proactive industry leaders. If there's someone who is looking for guidance on leasebacks after talking to your broker, laugh out loud, of course, got to put that caveat in there, that they'd be happy to give you a guidance sheet for these type of situations. And that's the whole part. We might not be doing a deal together, but if I still need to pick up the phone and say, hey, that's what I did with Matt this week, Todd. I was like, I've got tons of people in situations, whether they're homeowners or clients. I want to go through 27 different scenarios of what ifs. And I had sticky notes like a mad person. And this one was going here and this one was going here on Friday. But that's the deal. Matt, who's one of Todd's agents, he's working 16-hour days and exhausted. I have no voice. He had no voice. But we're still sitting there going, we've got to figure these things out, because the next phone call when somebody's crying on the other line, I want to give them some hope. And then I also want to be able to guide them in the proper direction. And I know that's what we all want. So we might not have all answered everything. We've got 3 minutes left. So I'd like to give the three of you just a chance to say some parting wisdom. Britt, we really went easy on you tonight, by the way, and that's okay.
Thank you.
You're welcome. But let's start with you. Okay.
Well, I think, we talked earlier about our deals closing now, or that, did they rush to close or whatever? I'm in the business of closing deals. And yet I do agree with your statement that that parties should not be hurrying into these things, just to get a title policy out of it, or just to get a agent commission, or we all need to make sure that we're advocating properly for the clients. And, like you said earlier, Ashley, the buyers, I mean, there is going to be another house. I know there's limited inventory, but there's going to be another house, and we shouldn't be afraid to walk away.
Always. Dave?
Man, I got a lot of things running through my head, but I think one of the most important things that sticks with me is when I talk to a buyer or someone calls me for a refinance and I say, who did your last loan? Man, I don't even know. Who was your agent? God, I don't remember. Who's your insurance company? Man, I know who it is, but I don't know who my agent is. Man, that says a lot right there. And that's 95% of the people I talk to. It's like, I think all of us have been in business long enough and I know y'all personally, so I know that we're all, to our faults, hand holders. But that's how we are, and that's how we're built. And it's sad if you're going to close a deal and a year later they don't remember who you are. I mean, we should be kicking ass and taking names with our service and the way we treat people, so that, I mean, I have people call me all the time that I did 4 or 5 years ago that have a question, and I'll take the call, and it's because I remember, and I think that's important. I think too many things are getting lost on the volume, how much I got to do, how much I got to make versus just really taking care of people. And that in the end, that's really the most important. I don't think I'm a salesperson. I bump heads with all the mortgage trainers. You're in sales. I'm not a salesman. I'm a facilitator. And I want to get a person from A to Z in the smoothest possible way to where they know who the team is, and they know that they're going to be taken care of.
Mm-hmm.
No, but that's absolutely right, Dave. So, I mean, and then that's the other thing is so many times when people are in crises like this, it's not that they don't want to call, it's they don't know who to call. And that breaks my heart because I can tell you right now, my clients knew they could pick up the phone. Now, cell service was spotty, so it might have come in 4 hours later. But they could pick up the call. They could text me, they could email me, and they would say, I need this, I need that. I was also watching Facebook, the posts that were coming in that were breaking my heart and saying, all my pipes are bursting. I don't even know where to start. And I'm texting, one of them was my photographer. And I said, hey, buddy, I know you know a lot of realtors, or you have somebody working. He said, I don't even know what to do. He said, I said, go stop the water. That's what I said, go stop the water. And then call these two people. And by the next day, he at least was able to have a hot shower. And it's been going on for days. And that was the thing was I was watching for that, even if that's my photographer, he makes me look good. But at the end of the day, I'm not trying to make money off of his back. That's my service. And that's what I'm going to do, whether you're my client or you're somebody else. And we have all of these relationships for that very reason. So, look, see, Kathleen Alexander, she's like, call Todd. Goodness information. That's such a great marketing and business development person. Fellow Nate, heavyweight 28. But Todd, I'm going to let you kind of, give your final parting words as well.
Okay. Well, my mentor of mine a long time ago, and you guys have alluded to this, he told me, the right thing to do is rarely the easy thing to do. And, we all are commissioned salespeople and the dollar drives our emotions many times. But, like you've said many times, Ashley, in this call, doing the right thing is what will keep you in business down the road. And it also helps you look in the mirror and feel good about yourself. So I encourage everyone, including myself, to use that as your guiding light. And for my part in all this, insurance, I actually enjoy talking about insurance, which is a sickness. And so does my team. They actually enjoy it. So if there's questions, please use us. And we've got 8 folks here in the office who are all fully licensed and understand home insurance very well. And we want to talk to people about insurance. So Dave, when you say you get a call from someone you helped 4 or 5 years ago, for me, that's like, oh, great, I get to talk about my business. Sounds good. That's what we like to do. So we encourage everyone to use us as a resource.
Well, and we'll make sure everybody's contact info, because Kathleen was on it for Todd, but we'll make sure Dave and Britt's information is in there as well, because I'm pretty sure that even if they haven't done a transaction with you, that if they reached out to you guys, you would still try to impart some knowledge on them, because at any point, if we can make our industry better, it helps our ecosystem continue to grow. And that's the same thing. I'll tell you, I got 2 new clients while my electricity was off calling me saying, I know it's bad. I'm really bored. I don't have lights on. Just wanted to call and say, hey, can we talk next week? I want to work with you. I was referred by so-and-so. And I got to tell you, if you can get deals and new clients when the electricity's off and it's snowmageddon, then you're obviously doing something right. And so I just, everybody has chimed in and said, just what a great group of professionals. And thanks for sharing your expertise. Thank you, Alan Smith, for being such a great industry professional too, and a great realtor. But, I just, again, the sentiment is I encourage everybody to take a deep breath. It's okay to press pause. And just know this too shall pass. So thank you guys so much for joining us tonight. I hope this wasn't a drain on your evening. I know everyone's super busy, but I appreciate you, and hopefully we'll be able to bend your ear again.
Let's support each other, man. This is a great opportunity to support each other in our industry and to have some compassion.
Yes, compassion and grace. Okay?
Yeah, that's right.
All right, guys. Well, finish your drink. Enjoy the rest of your evening. Britt, I appreciate it. And by the way, parting words from Sherry. She said she was ready, but she went light. So
She did.
she
She
did.
did. She took it easy.
Yeah.
All right, guys. Well, have a great evening. We'll talk to you soon.
Thank you.
Thank
Bye.
you.